I increased my win rate from around 50% to 85% by basically doing nothing. I didn't take more trades, and I didn't change my strategy. And before you assume I suddenly got way better at execution or became extremely disciplined, that didn't happen either. Everything stayed pretty much the same as it did before. All I did was make one small adjustment. Because the truth is, everyone believes that you need to do some major overhaul or have a massive jump in skill to improve your win rate. But you don't need to do any of that. Actually, it hurts you even more because you're constantly restarting and building up from zero. That's the trap most traders fall into, and it prevents their win rate from ever increasing. It stays stagnant no matter how hard you fight it. What you really need to do is exactly what you're doing now, with a slight shift. It's kind of like when you're launching a rocket and all you do is change the angle by 1 degree. It might feel like nothing for now, but later down the line, it's in a completely different place. So in this video, I'm going to show you exactly how I skyrocketed my win rate from that one small change, so you can apply it to your own trading. And just a quick disclaimer, none of this is financial advice. I'm just showing you what works for me. If you choose to use it, do it responsibly and size correctly. If your win rate is low, it's really only because of one reason. You don't know how to treat the day. And what I mean by this is you approach every day like it's the same. And that's a problem because the market isn't the same every day. Some days are clean, some days are messy, some days have real structure, some days are just noise. If you don't adjust for that, and you approach every session with the same expectations and the same level of aggression, the market will give you mediocre results. Not terrible, not great, just mediocre. And mediocre in trading looks like a coin flip. You're not losing every trade and you're not winning every trade either. You're just stuck. On top of that, the increasing frustration of being stuck will increase your chances of doing something impulsive or destructive. The market won't reward you for blindly participating, even if you're disciplined and follow all of your so-called rules. It only gives higher win rates when you're selective because you know how to treat the day. Now, to get out of this trading purgatory, we need to find a simple, repeatable way to know how to treat the day beforehand. All it takes is one small adjustment, just avoiding a couple of bad trades and taking a few more good ones, and our win rate increases dramatically. That adjustment isn't trading more or changing setups. It's deciding when not to push. And the first piece of this is directional confluence. What that means is that the price agrees on all time frames. Now, the way that the price agrees is also important, because you can have the price agreeing on all time frames and the trade ends up not working. Knowing the subtle difference between these is what separates a mediocre win rate from an excellent one. Now, there's only one tool we're going to need to use for this, and that's the cloud. And we're only going to be considering a trade if every cloud from the 5-minute to the 1-hour time frame is sloping in the same direction. This is pretty simple to spot. The cloud is like our North Star. It tells us everything we need to know already. We don't need any more indicators or extra signals. Actually, I'll link a video here where I go more in depth on the cloud basics and how to use it that you can watch after this. But the other things we need to consider if we want to get really accurate are cloud thickness and price's distance from the cloud. Let's start with cloud thickness. The cloud is just the 20 EMA and the 50 EMA with the area shaded in between. The 20 EMA is a smaller moving average, so it reacts to the price more quickly and follows the price more closely. The 50 EMA is a larger moving average, so it reacts to the price less quickly. When the price is trending in one direction aggressively, the cloud gets thicker since it drags up the 20 EMA much faster. And when the price is trending but moving up at the same rate, then the cloud will stay roughly the same thickness. And of course, when the price is trending but slowing down or even getting flat, then the cloud will start thinning out. That's how the cloud works. Now, a trader who reads the cloud blindly will just open up the chart, look at where the cloud is sloping, and take a trade in that direction. But they're not taking the cloud's thickness into account, because the price can be sloping up or sloping down, and the price might still not end up going in that direction. Not all clouds are created equal, even if they look similar. So a trader might take 20 trades following the cloud blindly and win 10 and lose 10. That's a 50% win rate. Now, this isn't bad at all. The trader might not even be unprofitable or break even. If risk-reward is structured properly, they can definitely be profitable. But we don't just want to be marginally profitable, we want to be highly profitable, right? And the way we increase this win rate is by being able to differentiate the quality of the cloud. because it's on a spectrum from an extremely thin cloud to an extremely thick cloud. The price can still be trending in all of these cases, so it might look like a good trade on the surface, but the cloud tells us a different story. The trades on the extremes are more likely to lose, while the trades in the middle are more likely to win, because the trend is much healthier. Because think about it, if the cloud is very thick, that means that the price was dragging the 20 EMA very, very quickly. And this usually indicates some type of parabolic or climactic movement. This is not something we want to touch at all because it's unpredictable and not healthy. Same thing if the cloud is thin, that means the price isn't trending strong enough to drag the 20 EMA significantly. We don't have a lot of confidence that this will continue. So if we take every single trade on this spectrum, we'll have a lower win rate. But if we cut out the extremes and amplify the trades in the middle, that's where our win rate can jump to really high numbers. Instead of having 10 wins and 10 losses, we'll have 8 wins and 2 losses. That's the power of being selective and knowing how to treat the day. So where do we draw the line? How do we know when a cloud is too thin or thick to engage? Well, the answer is in the chart itself. We can't have precise measurements for the cloud thickness itself, because the market evolves over time. So let's say we measure that when the cloud is over 20 points wide, it's too thick, and we shouldn't trade it because most of the trades lose. But that might only be true over the past 3 weeks. And before that, it wasn't too thick and the limit was actually 25 points. It's impossible to put a precise number or standard on something as dynamic as the market. It's also very shallow and doesn't allow you to understand the cloud intuitively, so you'll be just as clueless when the market eventually changes. What you need to do instead is this: backtest. Look into the past, go on charts spanning from the 5-minute to the 1 hour, and compare successful trades and unsuccessful trades. Don't try to use precise measurements, just use your judgment and observation. Look at when the price stretched too far from the cloud, and whether it reversed most of the time or not. That's how you get an intuitive feel for when the cloud is too thick, too thin, or just right. And you'll know how to use it regardless of the circumstance. Actually, I have videos where I backtest this exact system on ES futures. I'll link that here for you to watch after this. But that's really the entire shift. I increased my win rate dramatically because I didn't just blindly follow the rules to get mediocre results. I didn't change anything about my trading. I didn't try a new strategy, and I didn't add an extra indicator or try another setup. I traded the exact same way I traded before, except I was more selective. I used my judgment and experience to filter out the highest quality trades from the lower quality trades. That's all it is. A few small adjustments, and taking more winning trades, and avoiding more losing trades. As we saw before, it only takes a few of these each to skyrocket win rate. Now, I know this might sound too simple. It might even sound unrealistic. And honestly, I'd feel the same way if I hadn't seen it play out firsthand, both in my own trading and with hundreds of traders I've personally mentored. And that's to say that this isn't just theory. Using the LCE model in the cloud, hundreds of traders have broken above the 40 to 50% win rate ceiling and have had their trading consistently improve. If you're interested, that's the LCE Accelerator. We run weekly calls to keep your entries, stops, and targets clean, and you'll have a private one-on-one chat with me so you can get feedback anytime. You'll also get access to my supply and demand chart and a community of traders who all follow the same system and hold each other accountable. Click the link below to join. And if this video helped you, be sure to like, subscribe, and turn on notifications. I'll see you in the next one.